What's good, guys? I want to document how I was able to cut. I was able to catch these trades on GBP JPY. Also be able to catch these longs on GBP USD. Also be able to catch how I. Okay, I'm still getting in this position, but I've not entered that one yet. And also be able to document how I caught these shots on USD card, how I use the DXY to my advantage also for these shots here. So first of all, what I do is I get this indicator TGR session highs and lows, but it doesn't have to be TGR one, but any session highs and lows indicator would work. It's basically just showing you the range. London session Asia session is always red, then London session is always blue, then New York session is always green. So this is gonna show you Asian session highs. These are the highs we made well in Asian session of the day. These are the lows we made well in Asian session. Then entering London, because London opens here at around 8 a.m. So London opened around here in this candle here. So we were like, okay, now London is open. What are we looking for in the DXY? It's either the DXY tries to sweep one, but if the DXY first takes out this liquidity, we are not going to want to we are going to want to continue lower because we have less liquidity zones up here, because we won't want to come and take out or fill this gap yet. We wait for a bigger pullback or a bigger move where we can get more money out of the market. So when we went up here, we clearly went above these highs. So now retail traders are now seeing this as a bullish momentum, following the trend, making higher highs and higher lows, higher highs, higher lows. So he's thinking this is going to be a higher high, higher low, then again higher high. So retail is going to see this and so put their buy signals here. Now, what happens is when retail put their buy signals here, they are going to put their stops somewhere just below here. They're going to wait for this candle to close. Now, what the market does is market left this fair value gap here. So this fair value gap now got invalidated, got inversed, and it is now null and void. So normal ICT traders, some ICT traders have taken their trade off this inversion fair value gap, but I'd like to wait for more confirmations first. So we got a low, and how do we get a low? Lows are basically market moves. When market moves down, then it moves up. Then highs are when market moves up and makes a move down. So that is basically how I take look for break of structure. When the next market now goes here, market broke structure here. And it has to do it when we are in an opposing trend. So when if we are going like if market comes down here, we are breaking structure to the high side. If market was already bearish, or if market is like this, we are going in a bear formation and market breaks below this low, we are going to want to tap back in and continue down here. Same goes as the opposite. So we see market was in a market was okay. We have just entered a position there. Market was in a bullish move. So market came down here, then broke. As it came down, it left this low, wanting to reclaim this place. But no, market did not reclaim it. Market came down and invalidated this low, creating a break of structure. Normally, I would enter here, but normally I want to see when market creates a break of structure, the candle following it is going to be the fair value gap. I want that candle to come back and be filled. So price came here, came back and filled this fair value gap. As it came back, that's when I started gunning for the lows that you see on the screen. And let me get all this out. That's when I started get running on these lows. I gone on these lows now to target the Asian previous draws on liquidity. Of course, we have gone lower, but we are happy with what market gives us. Any other big break of structure when this was already a low market broke structure here again, we wait for the FVG. So here seeing this move already in this inversion fair value gap, I already knew that there's a possibility for the US dollar index to want to short. So anything that is going against the US dollar index would want to long. That's GBP USD, GP JPY, CHF USD, Euro USD, anything against the USD will want to go up, then anything the USD trading against is going to want to short. So I entered the GPJPY, then saw the also the same move that happened. What happened now? We went in and immediately Asian session open. We came in, swept this load, but we did not create any fair value gaps here. We just created an order block. So we came in this creating this other block, dismembering it, creating a breaker block. So now this breaker block, people would think that okay, when it's coming back up here, it's going to cancel out, but we don't forget that there's also a fair value gap here that is created. So when price invests this fair value gap, you get most people want to take longs, but we wait for a conversation break of structure. So we want to use these highs that got immediately after we swept. So we use these highs, we wait for price to break these highs. Price broke these highs here. You could enter your buys here, but I entered a bit late, but I was still in the zone. I entered my buys here. We created a new high, came back tapping still. Then we went there and created, broke this, continued with this structure. So this can be another entry model. Wait for it to retap here. Then I now waited. Ultimately, I wanted a trade that I'm risking absolutely nothing, where I don't even go to red. That's why I didn't want to take this one. I wasn't sure, but this one was 100% trade. I just entered here and it gave me my move for GPGPY. Then for GPUSD is the same thing, but this already a range in fair value gap here. So I don't want to talk about that. Maybe I'll talk about it in another video on why I drew that fair value gap there. But obviously it's the same. These are Asian session highs and Asian session lows. What did market do? Market came in, swept liquidity, created a high, created an inverse fair value gap as it created this high. So what we do, we wait for a break of structure. Market had a break of structure here. I would love to have entered market here or market here. If we entered market here, it would have been a bit of a loss, but we would have not gotten stopped out because of this my inverse fair value gap that respected the move. Then we now got another high here. Continue. We can still enter here again. Move. Then we get a move up finally. I didn't want to just target here. I knew that price has the possibility and wants to come to this fair value gap so that it can also want to fill orders. But I would wanted to see price invest this gap too. Then I can fill orders down. But see, price hasn't done that, and that's why I didn't get to enter. So I would have rushed. Some people would have rushed and put their positions there and gotten stopped out. But price didn't want to do that. So we respect what price wants to do. How I now cut USD Chef. USD Chef is basically the same thing. I've been saying price came here, swept out London highs, Asia highs. We swept them, we now came back, created a low. What do we call a low? A move down, then a move up. Then how we see a move down, then a move up in market? A move down in my chart is basically black and the move up is blue. So this here is going to be a low. So if price came there to this low and didn't close full body, we're not taking it. But now it closed with wick, the first one. So we are not still taking it as an entry. Now this second one closed full body below this low. Now we can want to enter a clean sales here. And even if they enter a clean sales, we would have still come back, retested there, and gone to opposing liquidity. But I wanted zero risk trade, so I waited till we use this one. Normally you don't need to use this one, I can use this one. I use this one all the time, but I was just wanting to be patient today. I use this one. I also use this one as an entry. So we came up here, I saw this fair value gap, saw this other inverse fair value gap, followed with this bearish order block. I knew it was a very strong sell momentum. I now hit my shots down back to Asia lows, got the dubs and got out. We are in currently a long position in what do you call it, USD JPY. We have just come back this zone breaker block. We are still respecting this zone. There's a breaker block here followed by inverse fair value gap here, which is much this is for an inverse fair value gap here, which is much of a bullish signal back to target this highest. But let's wait and see. If it doesn't go to our then take profit, it's okay. We have made money from the day, we have gotten something from the market. At least we can get a W. That is basically how I caught it. Euro USD, the same strategy. I'm just showing you, this is just a trade recap. If you want to learn I've posted other videos. Sorry about the background noises you might be hearing. I didn't have my mic with me. I just wanted to do a rush expose video. Thanks and peace out. Subscribe and like if you enjoyed what I've just posted. Black Trades out.